Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Alex Coffey, Senior Trading Derivatives Strategist at Charles Schwab, as well as Joyce, Managing Director on the Nasdaq Market Intelligence Desk. We're here for a technical review on the charts with what's moving the market. It's great to see the both of you, as always. Alex, let's kick this off with you. We're about 25% through earnings season. What are your thoughts so far? How's the market performing?
Yeah, it feels like it's just getting started, but as you mentioned, through about 25% of the S&P 500 names. Jill, always good to be here. 84% beat rate so far on the earnings front, and the aggregate one-day price reaction, I just checked, so far through about 25% of those components for the S&P 500 is positive 0.4%. However, when you flip over to the Nasdaq 100, which has so many of those names that retail traders follow, we're only through about 20% of those components. It's a little bit lighter beat rate at 74%. But so far, the aggregate one-day price reaction is down 0.5% or just shy of. So far, I'm a big believer that earnings seasons take on a theme or an attitude to them. This early theme is some of these higher growth, higher beta stocks that we oftentimes find in the NASDAQ are not performing as great, and earnings haven't been a net positive, at least thus far.
Yeah. Brian, let's take a look at the Nasdaq 100, cap weighted as well as the equal weighted. Anything you could tell us about the performance with those two?
Yeah, I mean, certainly the last couple of weeks since earnings season has been underway, we have seen some corrective price action. It really started 2 Fridays ago when we had the China tariff, concerns there, and the broader market sold off. But we had a very good run up in the month of September going into that. So I think it's, a matter of positioning. Just as we started earnings season, we have seen essentially, a high in the Nasdaq 100 and the equal weight during that first week of October, and since have undergone a sideways kind of corrective price action. So in the last week alone, the Nasdaq equal weight, you can see right here, did make a marginal new closing high just 2 days ago. So nothing to be too bearish about, giving new highs. And the cap weight in Nasdaq 100, nearly essentially the same thing. It's, we're consolidating right below the 52-week high. So we're not seeing any major deterioration underneath the hood of the surface.
Yeah, Alex, I want to take a look at the dispersion index. I know that you're always taking a look at volatility and what's happening under the surface. Anything you could tell us here?
Yeah, one thing that's been really interesting over the last month or so is that the market itself, whether that's the S&P 500 or the Nasdaq 100, hasn't really moved a ton. It's been a nice upwards trajectory, but the volatility itself has been relatively benign, with the exception of sort of that credit risk uncertainty that you saw in the middle of last week. But volatility had been in the 17, 18 range. However, the constituent volatility, which is the measure the SIBO puts out, which is VIX EQ, had been slowly but surely climbing. Dispersion index, or DSPX, actually seeks to measure this relationship between the two. And as it goes higher, of which it did about a month and a half ago, really, really steeply, it was starting to say that under the surface, there's actually quite a bit of movement. It's just not showing up because it's been a bit of a tug of war. Now, one thing that I've said is, hey, if you start to get all of those names to stack up in one direction, we could have the recipe for a big move, perhaps to the downside, which we did get a little bit last week. However, we're now starting to see that dispersion come down a little bit, that gap normalize a bit, and some of that might be due to we're through about 25% of the earnings season, and we know earnings can increase that individual company volatility, but on the overall index, it kind of washes out.
Yeah, it certainly does. And Brian, I want to take a look at the consumer for a moment here as well, because we are at an inflection point, and of course, coming into the holidays and the strength of the consumer, that's going to be a topic we're certainly going to be focused on over the next couple of months.
Yeah, certainly we want to look at the consumer discretionary sector as a barometer of retail, which because it's such a big part of GDP, as you noted. And so the consumer discretionary index did make a lower high in September versus its prior high from the late 2024. It's been fighting with its 50-day moving average. As you can see here, it's getting back above it today. So, not too concerning, at this point in time, but something, we certainly, want to monitor here. When I'd like to also look at the relative strength of that index versus the defensive staples sector. And so we could see that also just in early October, that first week, right around when the S&P and the Nasdaq 100 kind of hit the 52-week highs, this ratio also basically made its high that same week as well, which coincided with the prior highs from late 24. So we're not seeing a breakdown of any sort at this time, but we are seeing some pullback, which kind of coincided as what the broader averages are doing in this, with this relative strength.
Yeah, and Alex, I want to take a look at the heat map for a moment here because you've noted that it's the mega cap names that are up. They haven't quite reported just yet, but I would imagine expectations are going to be quite high if they continue to lead the way such as they are today.
Yeah, bounce back day for mega cap tech, no doubt about it. If you were to look at the Magnificent Seven as a cohort, it's not quite pacing the gains of the Nasdaq 100, but it's certainly not pulling them back. You see the bright green colors around so many of them, and notably, you see Tesla flipping to green here intraday. Earlier, when we weren't up, 220 some points in the Nasdaq 100, some of that was due to the fact that Tesla was a bit of a drag on the intraday price performance. It's flipped to positive, now up a healthy 1.3%. That's certainly changed the math dynamics, not only for this, but also you guys were just talking consumer discretionary. It certainly helped that picture as well.
Yeah, it did. And, Brian, Alex had mentioned before that everything was up at one point just a couple of weeks ago, whether it was gold, silver, the market itself, volatility was higher. Let's take a look at silver here, right? I mean, it has the performance has been extraordinary. Does it have the potential to continue based on what you're seeing with the technicals?
So precious metals have been just on fire. And the question is, the move lately in the last month or two has almost gone parabolic, particularly with silver. And when gold tends to, trend higher over a longer period of time, silver at times can, significantly outperform gold. And same thing to the downside. This is a really long-term chart here of spot silver. And we could see this quarter and really in the last 2 weeks, it's finally reached the prior highs from the cycle in 2011, which is around 49.80, and then going back all the way to 1980 when it was trading essentially at the same level, 49.45. So the weekly RSIs at that time for each topped out around 85. We saw the same thing this week as well. So with this week and this quarter, we are seeing, it did move above that by more than 5 to 6%. But we're now pulling back. Last spot silver was around 49.20, almost exactly equal to these prior highs from 2011 and 1980. So my point in that is it's not surprising to me to see a pullback over the short term, given the strong momentum that we've seen in recent weeks and in the last year for that matter. And so where it goes from here, can the pullback be longer lasting? Certainly very possible, but I think the longer term trend still is constructive, but anything in the near term could happen given the outperformance and the performance overall on an absolute and relative basis to other asset classes has just been so strong.
Yeah. And Brian, the last chart I want to take a look at here is Bitcoin, and to see some of the zones that you're looking at where you could see some constructive consolidation.
Absolutely. So I think Bitcoin maybe is at a bit of an inflection point here. This 100 to 111 range has kind of been key. Sorry about that. My moving average is just holding up, but it's 110, 109 has kind of been a support level going back since July. As we can see here, this is a weekly period chart, and this equals the highs that we saw initially in last December and January of 2024 and early 25. We saw consolidation below that level in May and June. And just below there, around 104 is the 40-week or the 200-day moving average. And so 100 to 110, 11 is, I think, a range that, bulls want to see hold. It's certainly constructive to see it consolidating sideways along that range. But, where it goes from here, my bias is to go with the longer term trend. We could see that, this 40-week moving averages has been support since the mid of 2023 on numerous occasions on those periods of when there's longer term consolidation. That has been a level that bulls have been stepping up and defending successfully thus far. So I think this is the level to watch going forward right now to see if they can continue to do so.
Yeah, and to wrap up here, Alex, it seems as if the meme trade has accelerated again. Any insight you can give us based on the activity that you've seen from Schwab clients?
Well, what I could say is we talk about the stacks quite a bit, and the stacks coming into the month of October was on a streak of 4 straight months of showing increased exposure. If the month would have ended on Friday, last Friday, it would be on pace for a 5th straight increase in exposure. But we still have obviously some time left, but it looks like we're on pace to see a little bit of an increase in exposure for the month of October from Schwab clients, but perhaps decelerating of the pace.
All right. Appreciate both insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.